Welcome again to Kenyan Market Daily Podcast. Today, we're taking a deep dive into the very latest market reports. We'll be cutting through the noise, bringing you the essential insights from the Kenyan and global financial landscapes. Specifically, as of June 27th, 2025, you've given us a stack of in-depth sources, and our mission, well, as always, is to unpack what's truly important and why it matters to you. We're zeroing in on some of Kenya's biggest players, Safaricom, Kenya Power, and the heavyweights of the banking sector like Equity, NCBA, KCA, and Cooperative Bank. We'll be examining the Nairobi Stock Exchange's recent trends, digging into specific company performances, including their year-to-date earnings, and crucially, those buy, sell, or hold recommendations, with the rationale behind them, of course. And just as a sideline, we'll connect this all to the global market highlights impacting everything.
Absolutely. And what's truly fascinating here is how these various pieces of information, from an individual company's financial health, their strategic moves, to broader market sentiment and even global trade dynamics, they all connect. They paint a really comprehensive picture. We'll be exploring the nuances of how, for example, some sectors in Kenya are showing remarkable resilience, even amidst challenging local events like the reported street protests. We've seen that in the very latest market data.
Yeah.
It's a compelling story, really, of market pragmatism.
Okay, let's unpack this overall market picture then. It's quite striking. Despite some of those headlines about, well, street protests and civil unrest, the Nairobi Stock Exchange has shown some really interesting resilience. What exactly does the market summary tell us about what's been happening on the exchange?
Well, if we connect this to the bigger picture, the market actually extended its bullish momentum for an impressive fifth consecutive session. The Nairobi All-Share Index, the NSE, which broadly tracks all listed companies, specifically saw a 1.7% uptick. It closed at 152.45.
Right.
And this wasn't an isolated incident. Other key indices like the NSE 10, NSE 20, and NSE 25 track different segments, right? From top-tier companies to a broader cross-section. They also recorded gains ranging from 1.7% up to 2.3%.
A 1.7% uptick in NSE over 5 sessions. That does sound positive, especially, like you said, against the backdrop of local challenges. But what's genuinely driving that? What factors are pushing this growth, particularly when we hear about things like street protests affecting the economy?
Yeah, that raises an important question about market drivers.
Yeah.
And often, the underlying forces are deeper than the immediate headlines suggest. The sources attribute the strong performance primarily to increased investor activity, right in the local equities market. A key factor highlighted is the decline in returns from the fixed income segment, think government bonds or Treasury bills. When those traditional safe havens offer, well, let's say meager returns, it pushes investors. They start actively seeking better opportunities in equities, even if it means taking on more perceived risk. Additionally, easing global trade tensions, specifically those positive developments between the U.S. and China.
Yes.
That confirmed workable trade framework, allowing China to export rare earths to the U.S. That further supported this market sentiment. It creates a broader sense of global optimism that kind of ripples into emerging markets.
That's a really interesting dynamic, market gains amidst civil unrest. It almost seems contradictory, doesn't it? We've seen reports of insurers staring down billions, literally billions, in claims from protest looting. Yet the NSE gained a massive KES 21 billion in investor wealth. For, a curious learner, this seems almost paradoxical. How do we reconcile that? And specifically, how did foreign investors view this situation? Were they part of the rally, maybe even driving it because of different risk assessments?
Indeed, it's a striking contrast. It really highlights the selective nature of market activity. While the protests certainly had real-world impacts on some businesses, the broader market, particularly the blue-chip stocks, they seem to benefit from a different set of dynamics. Foreign investors, and this might surprise some, remain net buyers.
Really?
Yeah, recording net inflows totaling KES 65.87 million, which was actually up from KES 51.68 million in the previous session. This suggests a sustained confidence in specific, perhaps more insulated large-cap stocks. Overall trading activity, or turnover, the total value of shares traded, had actually increased by 7.6% to KES 500.32 million. KCB Group was the most traded counter, which is just another term for a stock, right? KES 182.73 million turnover, followed by Kenyan Pileshik. So yes, foreign capital played a significant role, identifying and investing in these specific pockets of strength.
So the market is showing undeniable strength then, drawing in foreign capital, and certain stocks are leading the charge. This really goes to show how sometimes the on-the-ground reality in specific sectors can differ quite significantly from broader market sentiment, especially when capital is looking for returns.
Okay, with that broad market picture in mind, let's now drill down into the specifics. You were keen to understand the performance of Kenya's major companies, so let's start with Safaricom. The reports mentioned it surged, fueling a significant part of the NSE's gains. What are the specifics there? What does that mean for its market position?
All right, Safaricom, its stock indeed surged, contributing a remarkable KES 16 billion gain to that overall KES 21 billion boost in NSE investor wealth.
Wow, it's huge. It is. That's a huge portion of the total market gain coming from just one company. It really speaks to its sheer market capitalization and influence. It was also among the top traded counters, KES 60.60 million turnover, and a top foreign buy to KES 45.96 million turnover, rose 1.6% in the session. Now, drawing from our primary source for these detailed insights, the Daily Whiskers market report, we see that while it didn't provide a specific year-to-date or YTD, earnings percentage, its performance since January 1st, or a formal buy-sell-hold recommendation, its immediate impact on overall market capitalization and investor confidence is just undeniable. It's a real bellwether for the market.
That's a truly remarkable contribution from Safaricom. Okay, now let's shift gears to Kenya Power and Lighting Co. plc, KPLC. The reports show an extraordinary year-to-date change for them. Almost unbelievable. What's behind that kind of performance?
KPLC presents a compelling case, maybe surprising for many. The Daily Whispers report specifically recommends a BUI for KPLC. Current price, KES 11.40, target price, KES 18.70. That suggests an astonishing upside of 119.3%.
Wow, 119%.
Exactly. And their year-to-date change is an impressive 137.0%. The reasons cited for this incredibly positive outlook include what the sources call prudent risk management. It's evident in their non-performing loan NPL ratio, which tracks loans not being repaid. It's remained impressively below the industry average.
That is a good sign.
A very good sign. Indicates a strong grip on their financial health, their debt management. Additionally, they show above-average return on equity momentum. That's a key measure, right? How efficiently a company uses shareholders' investments to generate profits. All thanks, apparently, to effective strategy implementation. The market also saw KPLC as a top gainer, up 8.1% in the session. And on the top traded counters, KES 38.99 million turnover. This also lines up with Kenya recently overtaking Uganda, now ranking second in Africa for electricity regulation due to reforms at EPRA. That signals a more stable operational environment for KPLC going forward.
Okay, here's where it gets really insightful, the banking sector. Equity, NCBA, KCB, cooperative bank. These are the pillars of the Kenyan economy. What do the latest figures tell us about their performance? Any investor recommendations? It's often seen as a bellwether for overall economic health, so what's the verdict here?
Yeah, the banking sector as a whole shows a robust performance. A median YTD change of 6.0% and a median daily change of about 2.1%. They've collectively played a significant role in that nasty uptick we discussed earlier. So, breaking it down. For Equity Group Holdings PAYOUT, its YTD change is 1.1%. It was also identified as a large-cap stock driving NASI's performance, and a top foreign buy indicating strong international investor interest.
Okay.
NCBA Group Kellogg stands out. A YTD change of a significant 21.9%. That suggests particularly strong momentum within that specific institution.
Quite a bit higher there.
Then KCB Group Payout recorded a YTD change of 11.8%. And as we noted earlier, it was the most traded counter by far. High liquidity, investor confidence. And the Cooperative Bank of Kenya Ltd, it has a YPG change of 5.5%. Another large cap contributor to the NASI gains, showing consistent, steady performance.
Right. Any specific buy-sell hold calls on these big names?
Well, specific recommendations for these exact banks weren't universally provided in the Daily Whispers report for this session. However, ABSA Bank Kenya Plowed was given a clear BUY recommendation, with an 8.6% upside potential and a YTD change of 5.0%. The reasons cited for ABSA's positive outlook: strong cash flows, a healthy main business line, and a prudent investment strategy. Oh, and it's also worth noting how banks are positioning themselves for future growth. Stanbic Bank, for example.
Yes.
They're targeting KES 12.9 billion to fuel Kenyan startups in agribusiness, edtech, health, creative arts, in partnership with the Gates Foundation, which shows, a forward-looking approach beyond just traditional lending.
That's interesting context. Always crucial to put local market performance into a global context, too. Especially as money flows across borders, global events can have significant ripple effects. While the Kenyan market has surged, what was happening on the global stage? What were the sidelines from the global market highlights? How do they connect to what we're seeing in Nairobi?
Right, context is key. And this raises that important question. How does the global stage influence our local markets? It's not just a distant headline, you know. A stable global trade environment often boosts confidence in emerging markets like Kenya. It can potentially lead to increased foreign direct investment or better export opportunities.
Mm.
So major global indices generally recorded bullish sentiment. In the U.S., the S&P 500 rose by 0.8%. The NASDAQ, heavily tech-weighted, gained 1.0%.
Mm.
European markets like the UK's FTSE 100 advanced 0.6%. Germany's DAX climbed 2.8%. Japan's Nikkei 225 surged 1.4%, though China's Shanghai Composite did edge down slightly, 0.7%. The main driver cited for this global rally was indeed those encouraging developments in trade negotiations, particularly the U.S.-China trade framework.
That specific framework again?
Exactly. The U.S.-China trade framework, allowing China to export rare earths to the U.S., isn't just about those two nations. It signals a de-escalation that global investors often interpret as a safer environment for capital deployment anywhere, including Nairobi, fostering a general kind of risk-on appetite.
Fascinating to see that global sentiment largely mirroring some of the local optimism. Suggests a broader confidence in the global economic outlook, maybe. Beyond our primary focus companies, were there any other companies or sectors that caught your eye in the deep dive, perhaps with interesting recommendations or just notable performances?
Absolutely. There were a couple of quick points that stood out.
Hmm.
British American Tobacco Kenya Peel, BAT, received a BUI recommendation, a 21.4% upside potential. This was driven by its progressive dividend policy, meaning consistent increase in payouts to shareholders and stabilizing cost pressures. Suggests improved profitability.
Okay, BAT, a buy.
Then Jubilee Holdings Ltd, on the other hand, was a LLD with a 23.9% upside, which indicates that while it has potential, now might not be the time for aggressive buying or selling. Its working capital improvement was seen as a positive sign, though. On the more cautious side, Standard Group Payout was notably a sell, with a 19.5% downside predicted. Primary reasons cited were businesses reviewing advertising budgets, which impacts their revenue directly, and the company being in a loss-making position that significantly limits dividend prospects. And just quickly, from the agricultural sector, we saw Kapchorua Tea Kenya Payout at a YTD change of 6.0%, Williamson Tea Kenya Payout YTD change of 11.7%. Despite these declines, both actually proposed dividends, which is interesting given what the sources describe as difficult trading conditions in the sector.
Right, proposing dividends even when performance is down. Interesting signal. So what does this all mean for you, the curious learner, keeping an eye on the markets? We've seen a Kenyan market demonstrating really remarkable bullish momentum, driven by local investor shifts away from fixed income and bolstered by positive global trade news. Even surprisingly, in the face of domestic challenges like those street protests, key players like Safaricom are absolutely driving significant gains. KPLC is presenting an extraordinary growth story, backed by solid fundamentals. Meanwhile, the banking sector shows robust year-to-date performances across the board.
Exactly. This analysis truly highlights the interconnectedness of market forces. It's not just about what happens locally. It's also about how global trade frameworks and a broader shift in investor confidence can ripple through. They bolster specific sectors and companies even when there are reports of street protests. It underscores the importance of digging into the why behind the numbers, whether it's prudent risk management in a utility company like KPLC or strategic investments in startups by banks. That's what's driving the performance we're seeing. The market's resilience, even in volatile times, is definitely a key takeaway here.
So, for you, the curious learner, maybe consider this. How might the continued easing of global trade tensions or perhaps further shifts in local fixed income returns impact these specific Kenyan companies in the coming months? What other underlying factors might be at play that aren't immediately visible in these reports, like the long-term effects of those regulatory reforms mentioned for Kenya Power, or even how new technologies might influence the telecom and banking sectors further down the line? Keep those questions in mind as you continue your own deep dives and build your understanding. Thank you for joining us on this deep dive into the Kenyan and global markets. If you found this discussion valuable and want to stay ahead of the curve, we really urge you to subscribe to Kenyan Market Daily Podcast wherever you get your audio. And make sure to follow us on social media for more insights and updates. You can find all the links in the podcast description. Until next time, stay well informed.